Hi everyone, this is Tom Grisak, and I'm here with Greg Park. I've known Greg for probably about 12 years now. You've office
Been a while.
next to us you've got the office right next to us here in the KW Allen office for at least 12 years. So
Yeah, I think we moved in as the in-house lender in 2009, so
Yeah.
15 years in here and next door to you for a while.
yeah. And Greg, his company is American Mortgage. And I'm going to ask Greg a lot of questions today. Some of them are very basic, and then others, we'll see how much in detail he can go. We're trying to keep this interesting. And what is your website address?
It is www.amortgagecompany.com.
Okay, good. Let me start off by asking you a little bit about your history. Did you grow up here in Texas?
I did. I was born and raised in Irving, Texas. Went to Irving High School.
Mm-hmm.
Graduated from there. Went down to the University of Texas in Austin.
Mm-hmm.
I got my Bachelor in Business Administration, specializing in accounting.
Okay.
Graduated. Kind of fell backwards into the mortgage industry. Had no idea what the mortgage industry was about. But they needed a entry-level accountant to handle the books for a mortgage division for a company called the Associates out in Las Colinas.
Mm-hmm.
So I went out there and did the books for a year and realized, hey, I'd rather originate than sit back here in the office crunching numbers all day, and made the transition. And then I kind of gained my experience with that company for about 5 years. And then in 1999, when they changed some of the laws and they allowed us to open up our own broker shops, I made the transition and started that in 1999.
Do you have to be licensed to be a mortgage broker?
You do. To be a mortgage broker, you have to get a certain type of license here in the state of Texas. To be a loan originator, you got to get a certain type of license. I've got them both.
What's the difference between a mortgage broker and
A mortgage originator?
Yeah, exactly.
The broker is the guy that kind of runs the shop. He sets everything up with the investor relations. If he's going to do many correspondent loans, he gets his line of credit or warehouse lines in place. And he gives loan officers a home to come in and originate, originate only. They don't have to worry about any of the state licensing requirements, any of the state guidelines, NMLS guidelines, CFPB. That's everything I take care of as the broker.
Okay.
Loan officers just get out there and do their third-party origination. I need them originating loans and focused on that only.
Okay. And how many agents do you have? I guess they're called agents, just like realtors are called agents.
Mm-hmm.
How many agents do you have on your team?
So they're called in the state of Texas residential mortgage loan originators, RMLOs. We've got 12 at the time, at the moment. Okay. So we're growing. Back in the pre-CFPB days, we had quite a many, mm-hmm. or quite a few, excuse me. And then in 8, 9, and 10, when the economy was struggling and the mortgage industry was under some scrutiny, we lost a lot of LOs, and now we've slowly built it back up.
Okay.
And very proud of that. We're very proud of the team we have, the quality of loan officers that we have, the experience, the systems we have in place. Stephanie, who runs our daily operations over there, is fantastic. So we're really happy with where we are right now, especially coming out of this market, and this mm-hmm. market that we've been in the last couple of years, where it's been a challenging one for your industry as well as mine.
Right.
We think we're really positioned to do well here in the next few years.
Yeah, and I'll ask you more about that in a second. But tell me about your family. You're married?
Married to my wife for 23 years, 3 kids, 2 in college and 1 that'll be in high school next year. 2 boys are the oldest in college. We've got our daughter now that's transitioning from middle school to high school next year. Yeah. So the boys are at North Texas.
Oh, okay. That's where my son went to school.
There you go. Kim went to North Texas, so she's an alumni. They're following in Mama's footsteps. And it remains to be seen with our daughter.
As far as, explain to people exactly what a mortgage broker does and how many people you work with. How, like, when people go to you for a loan, you've got a lot of different sources you can go to. Explain how that process works.
We're a little different than just a bank in that, banks have got checking and savings accounts. They've got money market accounts. They offer auto financing. They offer mortgage financing. They've got a lot of different things that they can offer. We as a mortgage broker specialize in mortgage only. Mm-hmm. That's all we do. Our residential mortgages. So being a broker allows us to sign up with multiple investors as opposed to a bank having one set of interest rates, one set of programs. Right. We've got multiple investors, multiple 30-year fixed rates, multiple ARM programs. a lot of non-QM, non-Fannie, non-Freddie type loans that we offer.
What is QM?
Qualified mortgage.
Oh, okay.
And that's your standard Fannie, Freddie conventional loans.
Right.
Those are QM loans, the one-offs that maybe some people or some borrowers can't fall into, can't qualify for. We can route them over to non-QM, which is the non-Freddie Fannie stuff, bank statement programs, asset depletion, those types of things.
Okay.
So it allows us the ability to kind of place that loan and have multiple avenues to do it instead of just one.
How many do you think different lenders do you work with?
Probably minimum 15.
Okay.
I would say we
And
probably.
they can pretty much cover everything from, I'm sure you can't, no one can do everything, but they can take the bulk of the needs that you have.
Right. I won't say we can do everything, but I feel like if we cannot find a home for a loan, you're going to be hard pressed to find one out there. It'll be difficult.
And you can do lot loans? Lot loans?
Yep, we've got lot loans. We've got one-time close interim construction loan programs, for if you're looking for a new build, but you've got a builder that won't build it on their line of credit. They want you to get that line of credit in place and set up the financing for it. We'll do those. Going back to what we said, we've got bank statement loans, which is very popular for self-employed individuals. Self-employed individuals typically like to expense a lot of things on that tax return and reduce that tax base. The bank statement programs allow us to bypass tax returns and use average deposits for the company over the last 12 to 24 months and use that as the income to qualify.
Right.
Asset depletion and asset utilization programs. Individuals that maybe are retired now, that don't have those consistent streams of income to buy the size of home they want, but they have the assets. We'll look at the assets and base qualifying on the assets that they have.
Okay.
We've got some grant programs. First-time homebuyer programs.
Yeah, that was. I had no idea. I saw that you put that out there the other day, and that was never around when I was buying my first home. Explain what that is.
So for certain individuals that are in area median income locations or in just certain locations in general, there's a $5,000 grant program that we have that is free money to them if they qualify. It's money that we give them, or the grant program offers them at closing, that can be used for closing costs and or down payment. Okay. It's a really good product and program. We've got a couple of others that are similar to that. So it's one of those things where if anyone wants to know if they can qualify, they just get in touch with me.
Right.
I can get in the system, see if they're in a location or they're an area median income location that can qualify. We can let them know immediately.
So these programs, they're changing all the time. I mean, you really have to stay on top of what these different lenders are offering.
Yeah.
How do you stay in touch with everything? As far as, okay, we got a new program. How do you know that they've got a new program?
It's a full-time job in itself. I'll be honest with you. When you've got multiple investors that have multiple updates constantly, adding programs, adding products, changing rates, adjusting this. It's a very dynamic industry that we're in, and so we have to stay in communication with our account executives.
I can imagine.
Yeah, they're our liaison with our investors and everything that's happening. So I've got my list of account agents with my different investors that we deal with, and we get updates daily. And then when we get the updates, we try to get it out to our database, to our referral partners, to give you guys the updates and keep you in the know.
What are the toughest loans you have right now to do, would you say? When one comes in, you think, oh gosh, it's going to be tough. Is there anyone in particular that you're having a hard time with?
Yeah. 30 years in the business, for me, they're not as difficult and as challenging as they used to be because I've been doing it for so long. I'm almost like an underwriter looking at a file when I look at it for pre-approval.
Okay.
Some of the more popular programs, it might be a challenge for others. For instance, one I was reviewing before we walked in to do this was it's a bank statement program. I've got a borrower that husband and wife that need to do a cash out refinance to pay off some of their consumer debt. They own the home free and clear, but they've got 3 different businesses. They're not a W-2 or salaried or hourly wage earner. They're self-employed.
Right.
Now, they're 50-50 owners in the business, each one. But one of them can't be on the loan. I won't go into reasons why, but they can't be. So I've got one of the spouses going to be qualifying for the loan, and they are 50-50 owner in the 3 different businesses. So we've got the business statements coming in, we've got the tax returns, and we're going to evaluate whether we can do a full doc loan with the tax returns, or if we don't show enough income to qualify there, we're going to transition over to the bank statement program. Not
So you're a
difficult.
troubleshooter in a
That's
lot of
right.
ways. You
That's
can-
exactly right.
It may not be an ABC easy to do. It just takes some work and takes some knowledge and experience how to make it work.
Right.
Whereas maybe a new mortgage broker would come in and they may not know how to handle it. That's where the experience comes in.
It might be a little overwhelming for someone
Yeah.
that's new,
Yeah.
and for someone that's kind of an old dog in the industry like me that's been here a long time. It's just a little time consuming.
Right.
It's not a daunting task by any means.
Right.
It just takes a little time to break down the tax returns to see if we've got enough income there,
Right.
or if we need to transition to those bank statements.
Right.
Let's break down these 3 different companies' bank statements, get it
Okay.
packaged up, get over to our underwriters, and get moving forward that way.
It takes us typically about 30 days to close, so we very, very rarely have problems as far as lending is slowing up the closing. What would you say the average time to get the loan in place so you are pre-approved for the loan?
To get pre-approval, from the time I talk to you as a potential client or a referral, I have my intro call. I send you the email that has the hyperlink to our application.
Mhm.
Click that hyperlink. It'll take you 10 minutes to complete
Okay.
the app. Once you submit it to us, if we're in normal business hours, an hour, we're going to pull
Wow.
credit. We're going to upload that and input that application in the system. We're going to scrub that app, and then we're going to import it into our automated underwriting engine and get automated approval. And
Okay.
if we get automated approval based on that information there, which is usually within the hour, then we're ready to issue an approval letter. Obviously, if it's a self-employed individual that's got 3 different businesses,
Right.
that may take us a little longer. But no, usually if it's a cookie cutter, streamlined Fannie Freddie type loan, which is probably 80 to 90% of the loans out there, doesn't take long at all.
Man, things have changed.
It has. We didn't have the internet back then. That's how long I've been in the business. So we had to FedEx the application packet along with the documentation needs list. They had to FedEx it back. We had to return FedEx envelope. Then we had to pull credit, which took about a week to get in back in the day. So the process back then was a whole lot longer than it is now.
Wow.
And probably contract to close with us is 2.5 to 3 weeks. If you need it rushed, we can do it as little as 2.
Okay.
So it's a fast process if you have your systems in place like we do, and we've got experience on our
It's
side
all
and
about
good people.
systems, isn't
Yeah.
it? Our business too.
It is. And when you get them in place, it can make that process be very quick.
Yeah. Everybody is concerned about the rates. Obviously, it jumped up there to almost 8% on a 30-year fixed. Well, first of all, what percentage of people are going for a 30-year fixed versus maybe a 15? Is it overwhelmingly 30?
Because of the increase in rates, yes, it's overwhelmingly 30-year fixed rates right now. When you take the increase in rates coupled with the fact that there's no prepayment penalty on our programs, the 30-year fixed is the most popular because they can make the 15-year payment
Right.
on that 30-year fixed rate and pay it off in 15. But financially, if things get tight, they can fall back to that 30-year
Yeah,
payment.
and that's what we encourage people to do. The rates
Yep.
may be people are a little spoiled because that it was 3%. Like I don't know how long ago, 4 or 5 years ago.
As little as 3 years ago.
Oh, was it?
Yeah, as little as 3. We're two years into this higher interest rate shift that we're in. Plus, a month into the new year here, so we're going into year 3 here in 2024, and I've seen a lot of shifts in our industry in all the years I've been in it, and 2 to 2.5 years is about the time frame of a shift, whether it's a good shift or a bad shift or a challenging
It's a
shift.
cycle.
Yeah, it's a cycle. So we're pulling out of it, but yeah.
We'll never see that again, I don't think, in
No.
my lifetime, 3%.
I don't think so. You look historically at the rates, they have never been that low in the history of tracking the interest rates.
Yeah.
Okay? And everybody says, hey, well, I'll just wait for these rates to come
Yeah.
back down. Most likely, they're not going to come back down to 2s and 3s in our lifetime.
What caused that? I never could understand. What was spurring those continual rate drops?
And you're going to get differing opinions from different economists and different specialists. I'm a specialist by no means, but it was kind of the perfect storm. A lot of it had to do, I think, with some of it was supply and demand, some of it was economic indicators, some of it was global impacts. There's a lot of things that go into determining rates, and I'm not an expert by any means. That's not what I do. But what drives rates are economic indicators, okay? Anything that's good for the economy is typically not good for rates. Bad for the economy, good for rates. So high unemployment, good for low rates. Consumer price index coming out. Anytime the Fed makes an announcement, one way or the other, is going to have an impact on rates. Any type of international or global strife, war, civil war, what's happening over in Europe, can have an impact on rates. And rates are based on the 10-year Treasury bond market. All right. Economic indicators drive the bond market, which in turn drive the interest rates. So some big indicators to pay attention to are going to be unemployment figures, housing starts, CPI. Obviously, when the Fed speaks or meets and makes an announcement.
How about being an election year? Is that going to have an impact?
Typically, election years, they typically like to try and keep interest rates low. What's happening this year? We're seeing rates decrease. You know, like you said, we hit the low 8s 4, 5, 6 months ago, and everybody panicked. And when we hit the 8s, we were not hearing any more talk about, I'll just wait till the 2s and 3s come back. Now we're hearing, hey, you know what, maybe the 5s and 6s won't be so bad if we get back to that. And guess what? We're in mid-6s today.
Exactly.
We're back to the mid-6s, and activity is picking up. I'm sure you've seen it.
Yes, absolutely.
We've seen it.
We just talked with our representative for Google too, and he said they track the click-through rates and all the activity on the things that they do, and they've definitely seen an increase in the past month, for sure, especially.
This year has started off way better as far as activity, loans on the board, applications coming in, than it has in the past 2 years. That tells me we're pulling out of the shift. We're going to pull out of this tough market, the shift that we've been in, this downturn, and we're going to get back, in my opinion, to a more traditional market where we're going to be 5s and 6% rates. I think 5s are coming. Whether we hit the 5s this year or not, I don't know, but we're back into the mid-6s now. And
I understand in March they were thinking about doing one. They decided not to do a rate decrease in March. So I don't know when the next one is planned, but I think that if you get, especially into the 5s, that will really start a kind of a flurry of buying activity.
I agree. We're seeing it already with us being in the 6s, and that's only going to help matters if we can dip back down to the 5s. Absolutely.
Okay, all the talk about the recession I've been hearing for the last 2 years, just everywhere in the paper, the experts say prepare for a market shift, a recession. Do you see any of that happening at all?
Historically speaking, and again, that's not my area of expertise, but I listen to experts in their field that zero in on this kind of stuff. In our industry, one of the leaders is Barry Habib. And yes, recession is on the horizon. The indicators are there. If we go back to historical data and look at it, what leads to inflation, what leads to recession, all the economic indicators involved. When you look at the data, historical data, and apply it to today, it tells us we're headed for a recession, which means lower interest rates.
Okay. So your opinion, is there a time, when are you the busiest?
Historically speaking, the second, third quarters.
Okay.
So what used to be your busy time of the year is still our busiest time. But first quarter definitely is picking up. This year, like I said, is probably the busiest first quarter, and we just wrapped up January. It looks tons better than the previous 2 Januaries. So this first quarter this year is starting out with a bang.
Good.
And we're excited about it. Thank goodness.
Yeah.
First-time home buyers, we're doing some first-time home buyer seminars and talking to them about the advantages of home ownership, trying to get them off the fence. Everybody, like I said, we've talked about it. The talk was, I'm going to wait for the rates to come back down. Well, here's the problem with that, and you know it as well as I do, Tom. You sit on the sideline and wait for the rates to come down. What's happening to that property value? 1, 2, 3 years down the road, while you're still waiting on that lower interest rate, that property value continues to go up and up and up. And a very modest 4% appreciation rate per year makes a huge difference when it comes to renting versus owning. So if I look at on one of our first-time homebuyer presentations, and you guys can't see it out there, but I'll throw some numbers at you. On a $300,000 property that you have the opportunity to buy today versus rent, if you're paying $2,400 a month in rent, that $300,000 property with today's rates would run you $2,484. So your payments are very similar, okay, on average taxes and insurance, okay? After 5 years, of renting at that market rent of $2,400, you're $144,000 into rental expense. You don't own anything. You've created no equity. You've built no wealth through that rent payment. If you were a homeowner at $2,484 per month on a payment, you created almost $19,000 in equity through paying down of the principal over those 5 years, where the big number comes into play. At 4% appreciation, you've created another $65,000 in equity. That's an $83,000 difference over a 5-year period. If you're a first-time home buyer, there's some 3% down payment programs. 97% financing for first-time home buyer, conventional Fannie Freddie stuff.
I didn't know that.
Yep, 3% down. Negotiate seller to pay closing costs now, and you can get into that home literally for 3%. Okay, we've got some 1% products for first-time home buyers. Again, that's a qualifying program.
Right.
But we've got some 1%.
What about when you get into the jumbos? And
we've got some really good 90% jumbo money right now.
You can still
90%,
Okay.
10% down on the
Good.
jumbo product.
Good.
We've got some very competitive programs. Our investors have figured out a need that we've gone to them and said, hey, we need a better jumbo product with a higher LTV. We've complained about it for a while. They listened to us and they came back with 90% LTV with extremely competitive rates.
Okay.
So.
And I was going to ask you something else too. Oh, what is the jumbo threshold now?
It's either 756 or 766. I'm sorry.
I remember when it was in the 400s.
When I started, I think it was 217.
Gosh, for a jumbo.
For a jumbo loan, and now you're in the 756 to 766 range. So that tells you, what does that tell you? What are
you're building appreciation?
That's exactly right. That tells you these homes are doing nothing but appreciating. They're increasing in value. And when anyone ever asks me, in your opinion, Greg, what's the best investment that you can count on? I tell them long-term, real estate. Real estate, real estate. Yeah. You might hit a home run one day and you catch a penny stock that goes to the moon, but long-term, overall consistency, in my opinion, is real estate.
I agree. And I want to say this about Greg, too. You can call them weekends, Saturdays and Sundays, and there's always someone there that can take the call and can help you.
Absolutely.
And I know that because I've had to call him off like 8 o'clock. I said, Greg, I hate to bother you. It was a Saturday night. I said, but I've got a question I got to get answered. And he was there and he answered it for me. So he and his staff are so good about, they know you got to move quickly. The good homes sell quickly, and you've got to be set up to be able to go in and make that offer on the home. You have to be pre-approved, walk in with that letter when you make your offer, and that strength. You're not operating from weakness where you don't know what you can afford. So I really encourage all of our agents encourage our buyers to talk with a mortgage broker like Greg, and let's find out what you can afford. You're not wasting your time looking at homes that really you're not going to be able to buy, and you're not wasting your time looking at homes that you can afford and feel comfortable at a much higher price. And that doesn't cost anything to do that, but you're really speeding up the whole process, and this business is all about speed. I've heard horror stories about Quicken Online and some of these other online sources where just the customer service was abysmal. How do you compare yourselves with them?
Well, it used to be customer service was the exception and not the standard. In my opinion now, customer service is a standard that just everybody has. How we try to differentiate it, products, programs, rates. One of the things that irritates me more than anything else when I need to get on the phone and make a phone call is I get tied up with a machine, and I get transferred around by the machine, and I get an automated service, and I can't get a live person on the line. Everybody gets our mobile numbers, and like you said, we answer our mobile 7 days a week up to 8 p.m. every day. All my loan officers understand that is a service that we provide, that we require here at Miracle Mortgage Company, and I think that can set us apart from a lot of different institutions, especially on a weekend, because when are you guys out showing homes to your clients?
Weekends.
That's right. All right. And you don't want to call and get an automated service. You don't want to hear that your loan officer
I'll
won't be
get back
back
with you on Monday.
Monday.
And they're ready to make an offer on Sunday.
That's exactly right. We need to make an offer Sunday, Greg. We need to talk to you today, and we need to get it ready to go, and we need that approval letter. That's, I think, the big separator. That and the experience, but that is huge. We answer our phones all weekend long, so we can get you guys what you need to get you fast tracking in front of the line on those contract offers you want to make.
Well, we consider them a preferred partner of ours. We have no association with each other business-wise with them. We don't have ownership in them, nor they do us, but we recommend people that we have done business with, we're comfortable with over the years, and you're always on the list.
Thank you, Tom. Well, we're super proud and appreciative to be a partner with your team here at the Grisak Group. You've got a fantastic reputation in the community, and we feel grateful to be associated with you guys. We thank you very much.
And appreciate you sitting in on the interview.
Anytime.
Thank you all for watching.